You are listening to ChartingWealth.com's market review for the market beginning Thursday, the 23rd of April 2015. We are looking, as we always do, at IYY. That's where we always start our review. IYY is a total market index fund. It is an ETF, an exchange traded fund. And of course, by total market, that's what it represents, the total market. We are looking to begin with, and depends on how you join us. You may be listening to audio only. If you would like to see what I'm talking about, always go to our website, ChartingWealth.com, where we post for free the video portion of all this, and you can actually see the chart itself. And what you will see is a number of green candles over the last many days, and 2 days ago, you would have seen a red candle where the market took a real nosedive on Friday, and then the market has tried to recover for the rest of the week. And what we see happening is we have a trend line now that's connecting three candles going up, the candle on the 16th, the 20th, and then the 22nd, and we have a continued uptrend in the MACD. That's the moving average convergence divergence also. And that is, again, that is simply a moving average indicator that we use that is very accurate in helping predict movements of stocks. And when I talk about candles, those are depictions visually, graphically, of movements of price of stocks or indexes. Well, indexes are bunches of stocks, commodities, whatever it is you might be looking at. Well, we saw the MACD crossover going up back on the 14th. We have seen the derivative oscillator continue to tick up over the last 8 days, and we continue to see an uptrend. Now, don't forget, this is the last of the big moving 6 months. It ends at the end of April, which we are quickly approaching, and we've continued to see a sustained up move. Here recently, we had a great up move starting back on, I guess, the 6th. And if we look at the short chart, the 4-hour chart we'll go to in just a minute, the half-day chart, you'll see very vividly that occurring. But we've continued to see an up movement. Now, I will note a little bit of caution that even with today's price up movement over the last 2 days, you do not see anything above what the market did on the 16th. You do, however, nicely see a greater divergence. That means that the MACD lines are moving apart, which signals continued movement up. And like I said earlier, the derivative oscillator is moving up. Now, if we switch over to the 4-hour chart, still looking at the IYY, the total market index, we have drawn a trend line on the 2-day chart, and we can see that on our 4-hour chart, the movement is still above that. What is interesting as we look at the breakdown on the 4-hour chart, we see that it has crossed over going up on the 4-hour chart. Again, it still has not crossed through the moving linear regression lines, the 30 and the 34. That again is acting like a ceiling. We had a little movement above it, but the closing movement was not above it. But we do see the derivative oscillator along with the MACD crossing over going up on the 4-hour chart, which is helpful. At the same time that our 2-hour chart's going up. When those parallel each other, that's always good. And when the candles are above the 2-day, the trend line that's connecting 3 candles or more, that's always also very helpful. So besides looking at the total market, let's go ahead and revert back to our 2-day chart, and we're going to switch over to the S&P 500. Again, another ETF, exchange traded fund, that represents that, and we see a very similar pattern. We've also been able to connect 3 candles. We have a crossover going up about the same time back on the 10th. We do see the movement itself starting back on the 6th, but we don't get in until we have indicators verifying the movement, and we did see that occur on the 2-day chart back on the 10th with the derivative oscillator and the MACD switching over, and we saw nice clean up movements. And again, on the S&P, we do have a crossover on the 2 candles from the 16th and from the 22nd, they actually are pushing through both the moving linear regression lines, the 30 and the 34 period. Now let's switch back from the 2-day chart to the 4-hour chart and see what we see. And again, it looks quite similar. We have a crossing over today of the MACD. The derivative oscillator's not quite crossed over, and we can of course see the candle movements up, particularly in the afternoon, were strong, and everything, all the movements over the last several days are above the 2-day moving average on the S&P. Again, good confirmed up movements. So let's now zone back out to the 2-day chart and switch over to my favorite chart, which is the QQQ, the cubes or the Qs, which is the NASDAQ 100. And we see again movement. The NASDAQ moved over going up on the MACD and the derivative oscillator several days later than the 10th, which those two earlier charts, the IYY, the total market, and the S&P, it did move over on the 16th and continues to move up. And in fact, the movement, unlike those other charts, is substantially higher than the days before. So we do see nice, good up movement on the Qs. And if we back out to the 4-hour chart, I guess we call that backing down, we do continue to see good movement. We see that 4-hour chart crossing over, going up on the 21st, confirm the next day with the, or actually later in the day, with the derivative oscillator, and then more movement up today. So nice, good up move continuing on the Qs. I will note for you, you can see if we go all the way back to the 6th of April, when we had the original crossover going up on the 6th on the MACD and the derivative oscillator, the Qs went from around 105 up to a high today of 108.51, some substantial up movements. But you will notice at the time period when the charts fell off, and that was right around the 17th. In fact, it was all on the 17th. That was last Friday. What happened with the big chart, which we always want to look to? The big chart did move over, some going down, but it never crossed going down. It was already in a down position. So this is the first time that we've seen it cross back over going up since all the way back, well, the last time it started going up was all the way back on the 9th of February, and those were pretty substantial moves up. So now let's move to our last chart, and that is gold. Now, if you've been listening the last few days when I said if somebody put a gun to my head and told me and made me say where gold was going to go, I would have guessed, and only a guess, that it was going down, because it appeared to slowly be losing momentum. That has been confirmed more today as the derivative oscillator has continued to fall. And also we see the MACDs coming together, the two MACD lines, what we call converging, which appears to be a crossover going down on gold. Now, hopefully, you rode gold up from 111 to its high of right around 117, and it is now appears to be backing off. We've actually drawn we've drawn a decent trend line going down. And if we back off from the 2-day chart to the 4-hour chart, it makes it a little more clear as to just what's happening with gold. In fact, on the 4-hour chart, you can see that gold moved over going down back all the way back on the 8th and has continued. It's ticked up a little bit back and forth, but the movement overall has been down and is down right now. Hopefully you made a good move up in gold and you got out and are saving yourself any losses as gold continues to move down. One last thing I would note on gold is if you look here lately, these Bollinger Bands, they are volatility bands. They have been tightening over the last many days because the movement of gold, as we've talked about, has been in a very short range. Volatility means lots of movement, and when the Bollinger Bands get closer together, you can tell visually that you have had a great tightening of volatility meaning that the stock's just not moving a lot, or the commodity in this case. So that's where we are on gold. That's where we are on the total market. That's where we are in the S&P and the NASDAQ 100. Thank you so much for joining us. Please do go to the website if you'd like to see all this visually on our video that we have recorded there. You can also check us out on Facebook and Twitter, and we just appreciate it, and we will ask you to continue to follow us each and every day. This is so important that you understand what's going on in the market, and the only way you can do it is not by cramming, but by spending just a few minutes with us every day, starting to see these movements, understand these movements, chart them yourself, and we would be happy to give you a copy for free of our layout at freestockcharts.com so you can get started at no cost. Thanks so much for listening. God bless and good trading.